In the last section, we've covered reversal and the objective of reversal. So today we are going to look at retracement and the objective of retracement. All right. So what is retracement? Is when price finally decide to start moving in the direction of the trend. Let's say, for example, you have your expansion to the upside, then you have reversal. Then after this reversal, then price continue to go up. That is what we call retracement. So this is what we call retracement. Let me use my arrow to cover it. So this is what we call retracement. This arrow that I covered with a rectangle or with this box is what we call retracement, right? Let me give you another example. In a downtrend, let's say we have our highest point here, the market come to the lowest point here, giving us our expansion, then it reverse to any one of these order flow, right? Then after achieving the objective, after getting to the order flow, then continue to move to the downside, right? So this downside movement is what we call retracement. Okay, let me give you another example right here. Let's say we have price moving to the upside, right? When price was going up, it created a breaker block. Do you remember our breaker block explanation? So price created a breaker block that like this point here, for example, is our breaker block. Then price go above that zone, which is this point here, to form a breaker block. So after price get to that level, then price come back down, right, to retest this breaker block here. So after retesting the breaker block, then price continue to move in an upward direction. So this is our reversal, right? And this is our retracement. So now, what is the objective of this reversal? The objective is this breaker block. So let's say we have expansion, right? Price expand to the upside, okay? And after expansion, it leave a fair value gap, right? Somewhere around here. Let's say we have a fair value gap here. Then price come back to the fair value gap, right? Then continue to go up, right? So what is the objective in this scenario? The objective is fair value gap. Let me draw a fair value gap here. Okay, so price come back to this fair value gap, right? So that's the objective. So this is our reversal and this is our retracement. All right, so let me give you another example. Let's say we have our expansion here, right? Then price come back to our order block, which is where the price expand from, right? When price come back there, then continue to go up, giving us what? A retracement. So this is our retracement. So you can see I've given you three different price action showing you different objective, right? Different objective of what? Reversal. Then what happened after market achieved the objective? It gave us a retracement. So let me show you example for a downtrend. So let's say we have our expansion to the downside and we have our fair value gap somewhere here. So price reverse back to the fair value gap after the objective has been achieved. The next movement is what? Retracement. Fine. So this is how you define a retracement. Okay, so let me draw the fair value gap here. All right, this is the fair value gap. So subsequently I'm going to explain a valid fair value gap and invalid fair value gap. Okay, now let's say price expand to the downside, then reverse back to create what, to give us other block. Then after price reverse back, that other block failed, then it comes down again. So the other block failed, right? So this point now becomes our breaker block, and price now reverse back to retest that breaker block, then continue to do what, to come down. The price now continue to come down. I hope you are seeing it. Price continue to come down. Okay, price continue to come down. So like this. So this point here becomes our breaker block, right? It becomes our breaker block because when price expand to the downside, pull back, giving us other block here, then that other block failed. Why? Because price come down below that point. So automatically that point now becomes a breaker block. And when we have this second expansion, right? Then price now reverse to retest the breaker block, which is the objective of the reversal. Then after the objective has been achieved, what next? Price continue to sell down. So this is another example. Then the other example is this. Okay, we have price expand to the downside. After expanding to the downside, then what? Price reverse back to the other block, then continue to expand to the downside, giving us what? A retracement. All right, so this is our other block here. I'm giving you different scenario in both uptrend and downtrend. So these three here is for uptrend, price coming from the lowest point here to the upside. Then these three here is for the downtrend, price coming from the highest point here to the downside, highest point here to the downside, highest point here to the downside. So can you see it? So what next? Okay, let me show you liquidity sweep objective. So let's say we have our expansion to the upside, right? Then when price was trying to go up, he pulled back to this point here, then continue to go up. Okay, right? Continue to go up. Let's say it stops somewhere around here. Then after getting to this point here, then price now come down below this point here, right? Then after coming down below this point here, then price continue to go up like this. So this is what our liquidity sweep objective. Okay, this is our liquidity sweep objective. All right, so don't worry, after drawing, I'm going to show you all of this on chart. So this point here is our liquidity zone. Then price come down to sweep that liquidity and continue in an upward direction. So that continuation that we have here is our retracement after the liquidity sweep objective has been achieved, right? So now sometimes price might probably not get to this point here. It might stop somewhere around here before coming down to sweep what? The liquidity, or price might even go above this recent high. It might go above the recent high, get to somewhere like this, then before coming down to sweep the liquidity. So it depends on the price behavior, right? So let me show you the same example in a downtrend. Okay, let's say we have this uh, expansion to the downside, then price pull back. After pulling back to this point here, then continue to come down like this, then went back again to sweep that liquidity. Okay, then continue to sell down. So this is our liquidity zone. Okay, this is our liquidity zone here. Okay, so what is the objective of this price action? The objective is the liquidity sweep. So after price sweep that liquidity, then we have our retracement. Okay, so retracement is a continuation price movement, right, after a pullback or reversal. So for example, this pullback might stop here or maybe somewhere around here before the liquidity sweep. okay, or maybe even go down like this before the liquidity sweep. It depends on the price action, as I explained earlier. So you can see how price move in different shape. Okay, you can see how price move in different shape. So once you pay attention carefully and you study this carefully, you start seeing all of this objective on chart. Start seeing all of this objective on chart. So let me show you a practical example on chart where we have our retracement after a particular objective has been achieved. Okay, so I think number one is okay. I'm gonna use the back line to draw both in an uptrend and in a downtrend to show you a practical example. All right. Okay. Now look at this one here. Price expand to the upside from here, then pull back to this point here. After pulling back to this point, then price go up here again, then later come down to our other block here. So what happened after the objective has been achieved? Price continue to go up. So this is what we call a retracement. This final price action to the upside is what we call retracement. So this is our liquidity. So what is the objective of this pullback? Is to come down and sweep this liquidity. So after coming down to this other block, then we have our retracement. Okay, so let me give you another example in a downtrend. Okay, look at it here. Look at it here. Price expand to the downside. When he get to this level, he pull back a little bit to engineer what? Liquidity. To engineer liquidity. Then come down to this point here. Then after coming down to this point here, then the actual reversal started to sweep the liquidity. You see, the actual reversal started to sweep the liquidity. And after the liquidity has been swept, then retracement. We have our retracement here. So here, this is the objective. So you can see the objective of the reversal. This is not the reversal. It is a fake pullback. Fake pullback. Price did that to engineer liquidity. All right. And like I told you, some uninformed traders used to put their position here. They used to sell from this point thinking that price will continue to go down. Then the objective of the price is to actually come back and sweep them out, take them out and use them as liquidity. Okay, so now price finally go back up above that point after sweeping the liquidity, then continue to expand to the downside. It's just like the same example I give you here. So let's look at another example where the objective was fair value gap. Okay, now look at this point here. Price expand to the downside here, then pull back. So what is the objective of this pullback? Is fair value gap. So price pull back into this fair value gap, and then we have our retracement. Then price pull back again to this fair value gap. Then we have our retracement to the downside. Okay, so in this scenario, the objective of this two pullback that we have here is fair value gap. Look at the fair value gap. This red shade is the fair value gap. Then look at the second one. This is the fair value gap. So if you don't know what is fair value gap, please watch the previous video. I explained fair value gap in the last session. Okay, so that you understand it better. All right. So you can see how price. Okay, look at another example here. Look at another example here. Okay. If you look at the chart carefully, you see that this is exactly how market move. Pulling back to achieve a particular objective, pulling back to achieve a particular objective, continuously, continuously, continuously. So let me show you multiple objective before retracement. All right. Sometimes price achieve more than one objective before retracement. All right. So this is one of the example. Look at it here. Price expand to the upside, right? Then it engineer liquidity here. Okay. Then buy up to this point here. Then engineer liquidity again. Buy up to this point, right? Then come down to this fair value gap before it finally retrace. Okay. So now this is a double objective, right? Now, what is the first objective in this scenario? The first objective was this liquidity sweep here. Then the second objective is this fair value gap. So price come down to sweep this liquidity, then also come into this fair value gap before the actual retracement happens. So this is double objective. All right. So let's look for another example of double objective. Okay, look at where I have this setup here. I'm expecting price to achieve double objective here. Now we have expansion to the upside, right? Then price pull back to this point here, right? Then get to this level here. So I'm expecting price to achieve double objective, right? So I'm expecting price to come down and sweep this liquidity here, then retest this breaker block here, and at the same time enter this fair value gap that is here. Then before I expect the final retracement to the upside like this. So this is what we call double objective, right? Double objective. We have expansion, then we have a pullback giving us liquidity, right? Then after the liquidity, then we are expecting price now to come down and sweep the liquidity, and at the same time retest this breaker block here, then enter this fair value gap before we expect another expansion, which is the retracement after the objective has been achieved. So this is a very practical example here again for you to understand retracement very well. So we've covered expansion, reversal, retracement. The next thing is consolidation, right? So we're gonna stop here. So see you in the next video. Thank you so much for watching this session.